Vancouver prices just fell back to 2018 levels. 8 years of price gains gone. Every update this month has been pointing at the bailout. The real story is sitting below the bailout, and it changes the math for every buyer in this market. Here's what I'm going to walk you through. The real numbers from the Vancouver Real Estate Board. What this means if you bought a pre-sale in 2022. What it means for the cash buyer who's been waiting. And the one thing every buyer needs to do before September. My name is Dan J. Reilly. I sell real estate in Metro Vancouver with eXp Realty. I watch this market every day, and every number in this video comes from the Vancouver Real Estate Board, CMHC, Stats Canada, and what I see on my own deals. No spin, just the data. Here is the number that says it all. The Vancouver Real Estate Board shows the typical condo in Metro Vancouver sold for $703,000 in April 2026. That is down 7.9% from a year ago in April. Pull up the same chart for 2018. You land in the same range. 8 years of price gains completely wiped out. This is not a slow drop. This is the market falling back to before the pandemic even started. Here's where it gets worse. 2025 was already the worst year for Vancouver real estate in over 20 years. Sales fell to levels we had not seen since the early 2000s. Everyone hoped spring 2026 would be better. It was not. 2026 is even slower than 2025. Let that sink in. A year called the worst in decades. And the next one is even slower. In May 2026, Metro Vancouver saw 2,150 total home sales. That is down 3.5% from May 2025. And here's the bigger number. That total is 26.6% below the average for May over the last 10 years. Plain English, a normal May in Vancouver gives us about 2,900 sales. We did 2,150. That gap is the whole story. A spring market should bounce. This one did not. Total homes for sale in Metro Vancouver sits at 16,917. That is 34.6% above the average for May over the last 10 years. The 10-year May average is around 12,500. We're sitting nearly 5,000 listings above that, and we have almost 8 months of supply. That is the worst number we've seen in a decade. May 2019 had under 6 months. We went from under 6 to almost 8. That is not a small move. When you have that much supply and demand drops off, prices only move one way, down. Now, here's the part that should worry sellers the most. The number of new listings in May 2026 is actually lower than May 2025. Fewer people are listing. You might think that means fewer people want to sell. My read from the field is a little bit different. A lot of sellers just cannot sell in this market. Prices have fallen to the point that the math no longer works for them. Some sellers don't have enough money left over after they sell to cover the cost. Some sellers cannot sell at this price and still afford to buy something else. So instead of taking a loss, they pull their listing and they wait. The market is not moving because sellers are stuck. That is a different kind of broken than just falling prices. That is the market freezing in place. Detached houses are bleeding, but they are not broken. The typical detached price peaked just under $2.1 million in May 2022. April 2026 price, just under $1,850,000. That is a drop of about $250,000 since the peak. Year over year, the detached price fell nearly $150,000 in a single year. If you bought a detached house in 2024 and you need to sell in this market, that is the real problem. Townhouses, same story. Not as bad. If you bought in 2022, 2023, or 2024, you're likely losing money. If you bought before that in 2020 or 2021, you're still in the green. Condos are getting hammered. That $703,000 typical price I just told you about, that is the 2018 numbers. 8 years of price gains gone. Anyone who bought a Vancouver condo between 2019 and 2024 and needs to sell now is likely losing money. However, not every single neighborhood is the same. Every street is different, but as a snapshot of the whole region, Vancouver condos sit at 2018 prices. That is millions of dollars of paper losses sitting on bank balance sheets across this entire country. The federal bailout that every news outlet is covering this week, that is the symptom. The 8-year reset below it is the real story. And here's the part that news will not cover. Compare May 2026 condo sales. May 2023 in Metro Vancouver saw 1,730 condo sales. May 2026, 1,009. That is a drop of 42%. 42% fewer condos changing hands than we saw in May 2023. That is what a market reset looks like in real numbers. So how did we get here? 3 things hit at the same time. Number 1, the mortgage cliff. In 2020 and 2021, Canadians locked in 5-year fixed mortgages at rates as low as 1.69%. Those same mortgages are coming up for renewal at 3.99 to 4.29%. That shift costs hundreds to over $1,000 per month. Number 2, supply broke. CMHC Spring 2026 report named Vancouver the leader in Canada for unsold finished condos, the biggest pile in the entire country. Number 3, demand fell. BC's population dropped by more than 41,000 people in 2025, the second yearly drop in over 150 years. And Canada is now in a technical recession. That means the economy shrank for 2 quarters in a row. The last 3 months of 2025 shrank by 1% for the year. The first 3 months of 2026 shrank another 0.1%. That is the textbook definition. Rates up, supply flooded, people leaving, economy shrinking. That is the perfect storm, and we're standing in the middle of it. So who actually wears the pain? 3 groups. Number 1, the 2022 peak pre-sale buyer. If you signed a contract in 2022 at peak prices and you close in 2026, the bank's price check came in at 2018 numbers, not 2022 numbers. Let me show you the math. You signed at $1,500,000 on a Burnaby pre-sale. The 2026 price check came in at $1,250,000. The bank only lends 80% of that. That is $1 million. Your deposit was $150,000. You now owe the developer $350,000 in cash on closing day. $350,000 that you didn't plan for, that you did not have. That is the chain reaction feeding the foreclosure wave I covered in my court-ordered sales video on this channel. Number 2, the investor with debt. Anyone who bought a Vancouver condo between 2019 and 2024, hoping prices would rise, is now underwater. Rents in Vancouver are down 5.3% from May 2025. That is the biggest drop in Canada among the 6 biggest cities, on top of 29 straight months of falling rents. Vancouver rents now sit 19.4% below their September 2023 peak, and empty rental places 3.7%, the highest since 1988. The math on a Vancouver investor condo with a big mortgage no longer works. Number 3, the 2024 buyer. If you bought in 2024 at the market price then and you need to sell now, you're likely down 10 to 15%. Real money, real pain. Now here's the part a lot of the news didn't cover. Somebody wins in every reset. Number 1, cash buyers with patience. If you've been saving for a down payment and watching from the sidelines since 2022, this could be your moment. You're about to buy at the lowest entry point in 8 years. Number 2, smart 2026 pre-sale buyers. If a developer launches a new project in this market, they're launching at 2018 prices, not 2022 prices. That is a huge gap in your buy price, but you only get that win if you know what to ask for in the contract. Number 3, patient owners. If you own a Vancouver condo and you need to sell, hold. 8 years of growth just got wiped out in about 8 months, and it won't stay at this level forever. The history is clear. This is a reset, not a crash that lasts. If you're closing on a 2022 presale in the next 12 months, order your price check early. Talk to your bank about extra borrowing options to cover any gap. Get a real estate lawyer to look at your assignment rights. An assignment is when you sell the contract before somebody else closes. Don't wait until closing day to find out what your cash shortfall is. If you're a cash buyer shopping in this market, pull the comps in the building, read the Form B, check the building inspection report. The unit price matters less than the building risk. I covered the 6 condo traps in another video on this channel. If you haven't watched it, check it out before you sign anything. If you're signing a 2026 presale contract, ask for things. Developers in this market are quietly saying yes to caps on assignment fees, caps on closing costs, longer deposit schedules, decorating allowances, rate buy downs. Developers are not going to advertise this, and if you don't ask, you won't get. How long does this window last? Possibly 12 to 18 months. The federal government just said Build Canada Homes and BC Housing will buy 2,200 unsold Vancouver condos in the fall of 2026. That alone takes off about half of the current pile. If Ontario's playbook is any guide, the next move is dropping the taxes on BC homes. That alone could drop BC new home prices by a chunk. The window for a cash buyer or a smart 2026 presale buyer to enter the 2018 prices could be closing, maybe 12 months, maybe 18. 8 years of growth wiped out will not stay wiped out forever. Vancouver does not sit at 2018 prices forever. Here's the pattern I've watched play out across 3 past resets in this market. The government steps in, supply clears, foreign money finds its way back in, people move here again, and the buyers who jumped in during the dip make the next 10 years of gains in 24 months. In the past, that's how Vancouver has reset. It would be silly to assume this time is different. If you're eyeing the Vancouver condo market in this moment, or if you have a 2022 pre-sale heading towards closing, comment the word sale on this video and my team will send you my buyer's guide for Metro Vancouver, plus my Form B checklist, plus the gap math worksheet I use with every client. If you want to talk one-on-one about your specific listing, your specific contract, and your situation, the link to book a strategy session is in the description. I can pull the comps with you, I'll read the Form B, and I can tell you straight if the math works or it doesn't. 8 years of price gains wiped out. That is the bigger story under the bailout. Again, my name is Dan J. Reilly. I'm a realtor in the Metro Vancouver area. Thanks for watching, and I'll see you in the next one.